You've lived a great life and done well for yourself. But what mark will you leave on the world? How will you inspire future generations? Stan Miller and Katie Beth Hand have helped thousands of people answer exactly those questions. If you've ever wondered, what will be my legacy? You're in the right place. Welcome to the Your Life, Your Legacy podcast. Now, here are your hosts, Stan and Katie Beth.
All right, good day, everyone. This is Eddie James with Legacy Stories podcast. I'm here today welcoming Leighton Tyau, founder and principal attorney at Copper State Estate Planning, an Arizona-based boutique law firm specializing in tailored estate planning services. With a background in economics and law, Leighton is passionate about helping families build and preserve their legacies through personalized service, focusing on complex estate planning matters like business succession, trust, and tax planning. Leighton provides customized solutions for each unique client. An active member of prestigious professional organizations and involved in philanthropic endeavors, Leighton prioritizes long-term relationships with clients and is dedicated to offering the highest level of service and support. Leighton, thank you. We're so glad to have you with us today.
Glad to be here.
Excellent. So first question, I wanted to kind of go back a little bit in time. So why did you go to law school? Why law school?
Why law school?
Yeah.
Well, I wanted to help people, but more importantly, I just didn't know what I wanted to do with my life. So I couldn't be a doctor, so I went to law school. That's the joke, but it has some truth to it.
I love it. That's great. That's great. And so law school, but knowing that within law, there were so many fields of expertise, why estate planning?
I actually came to estate planning after I experienced some other fields. When I was in law school, I actually wanted to be a prosecutor or public defender or a litigator of some type. I thought that's what lawyers did. That's what should be exciting. Be in the trenches and fight it out. And I got a taste of that. And then I got into family law, which has a lot of litigation there. But I found that I actually really didn't like dealing with the clients. That's probably the number one complaint about family law attorneys, and it's true. They're usually fighting because they're getting divorced. And so I decided to not do that, and I got into business law, and business law involves a lot of tax law. And from there, it was just an easy transition to get into estate planning, because estate planning combines elements of family law, business law, and a lot of taxes. And since I've just been very focused on figuring out how to build and keep wealth since I was younger, it's just been a very good fit for me.
That's great. Oh man, we're hearing a lot of great things here. And I know I shared it in your intro bio. You alluded to it again. Can you share a little bit more about this, how you bring in estate planning and tax planning in your practice?
Of course. So not only do we pay taxes while we're alive, but we do owe taxes when we die. And our beneficiaries will be taxed differently based on how we leave things to them. So I really view myself as 90% tax planning and 10% regular planning, where we decide who gets what, because that's usually the easiest decision. The hard decision then becomes, well, how do we make sure that my children won't have to pay an estate tax? Right now, the exemption is pretty high. It's about 13 million approximately. It's give or take a few thousand. Most people won't hit that, but those who do, it's very important to not get taxed on that 40%. But most people will get hit with the retirement account tax bomb. And I call it a tax bomb because when you defer the taxes, someone's got to pay them eventually. And if we leave them all to our heirs, with the new Secure Act, you only got 10 years to pull it out if you're not a spouse or a minor child or a disabled person. So usually for normal people, we've only got 10 years to pull it out. And that's, if you have $1 million in a 401k, that's pushing you up into the higher brackets. So we need to figure out ways to reduce that and get a lower tax rate for your heirs. There's also the generation skipping tax, which is an additional 40% on top of the estate tax. So that comes into effect if your grandchildren inherit. So if you have a skipped generation or people X number of years younger than you. And just some income tax when we're doing the planning, figuring out which vehicle will be best. Do we want to do some long-term capital gains? Is life insurance appropriate? Things of that nature. It's just a lot of tax.
That's great. Yes, yes. And I love how you're mentioning some words about coordinating, seeing if there's any kind of gaps. I know that in our practice here at Harvest Wealth, it's really resonates and aligns with what we do as well. I can definitely see why the research team felt that this would be a really great podcast for our audience today. If you could there, Leighton, share a little bit, love to hear, what does it mean to you to have this dual level of profession of serving people when it comes to estate planning and tax planning? What does it mean to you?
Can you clarify the question a little bit more?
Sure. Just recognizing, I know that for, that you've really shared with us today, so already over the last couple minutes, just some great nuggets for our audience to really consider when we're looking into estate planning in a way a little bit different than what maybe a lot of other estate planners may focus on. Right?
Okay.
You've brought in some additional pieces to go ahead and consider. It sounds to me like that comes from a place of more than just all, financial gain for yourself. So we'd love to go ahead and know a little bit more about, what does this profession of yours mean to you?
Absolutely. Yeah. So, well, we all hate paying taxes. So for me, I view it as a puzzle. Every client is a puzzle where I can figure out which pieces I can shift this way or that way to get the best possible outcome for the client and the client's family. And I also like working with their advisors who do the projections and can say, hey, well, your portfolio is going to grow 6% in 20 years. It's going to double, so that 1 million 401k is going to be a 2 million 401k by the time we finally reach your expected age. Or maybe we need to plan for long-term care, and is that going to impact our projections? Are we going to actually have less money than originally anticipated? And I just love working with those puzzles and helping people. And I feel as though we just give people that peace of mind that really lets them know, hey, we're in good hands.
That's great. Thank you for sharing. I know that when you had stated that when you first started in litigation, but now you have your own firm. How did you get to having your own firm with Copper State Estate Planning?
Well, to give you the simple answer, I just said, you know what, I'm just going to do this on my own, and I did. I've always been entrepreneurial in nature. When I was in college, I had a side business, and I've always been trying to figure out ways to be entrepreneurial. So starting my own firm kind of came naturally for me. It was fairly simple. The hard part was, well, of course, getting clients, getting people to trust me, but just being an expert in the field and just being available and listening. I found that works, and that's all we need.
That's great. That's great. And as you mentioned clients, what would you say is an ideal client, for your practice, Leighton?
An ideal client for me is anybody with a complexity in their estate plan. And I say that because if you either don't really care who gets your stuff, or you only have, one child and you're married or your spouse is deceased, where it's very, very simple and straightforward, it's not going to deviate too far from intestacy. It's not worth really paying me to craft a more expansive plan. So a complexity would be if you have a blended family, if you have a minor child where we need to leave the assets in trust instead of outright, if you have a spendthrift heir, or if you have concerns about the estate tax, and we don't know where it's going. So my projection is that 13 million is ridiculously high, and given the budget deficits, it's kind of an easy target for our Congress to say, hey, maybe we reduce the exemption a little bit. And it's already set to expire in 2026, but we don't know what they're going to do. So who knows? I'd say anything above 1 million, we should definitely talk about the implications of possible estate tax and leaving things in trust. Another complexity would be if you want to leave a legacy in trust, we can create what's called a dynasty trust. So in trust for your children, and then your grandchildren, and then your great grandchildren, and then their children. Or, we can do it for 500 years. Arizona has that statute, or we can go to a different jurisdiction where it's infinite. The only problem is, of course, dilution. Eventually, you'll have so many descendants that each one gets a very, very small piece of what used to be a big pie.
Yeah. Excellent point. Thank you again for just bringing in such a great scope. I love that your viewpoint when it comes to estate planning. I'm not even going to say estate planning. I'm going to say financial services. I love, that you're not myopic in how you tackle and serve clients. So what would you say, Leighton, what's the best way for people to go ahead and reach out to you to go ahead and learn more?
You can go to the website. It's copperstateplanning.com. And from there, you can learn more about me. And if you like what you read, you can give me a call. I'm always available to chat.
Excellent. Excellent. And what would you say when, with most clients, and I know you've alluded to this a little bit already, but I just still feel like, I feel called to go ahead and ask, what are some common issues that you feel like that you really help people out with?
Peace of mind, just knowing that they're going to have everything taken care of for their loved ones. Because, well, I've been through it, and going through a death in the family is nerve-wracking and it's chaotic, and you don't know what you're supposed to do. And by at least having one piece of that complex transition taken care of, it's a little bit easier for them. And then at least they'll know what you wanted. I actually view the tax planning as kind of secondary to that. What I really like to give the clients is that, hey, we're going to take care of your children, and we're going to take care of their children, and they're going to grow up to be good people.
A great answer. Really gives you a lot to think about, and puts that focus on legacy. Thank you.
Absolutely.
Thank you. What would you say there, Leighton? What are some common misconceptions that you feel that you hear when it comes to estate and tax planning?
There's a lot. Some of the more common ones is my children aren't going to fight over my stuff when I die. I would say, I don't have statistics on it, but this is my best guess. Most of the time, the vast majority of the time, they can take care of things without issue. But in the few times where it doesn't, it blows up spectacularly. Like they fight over the silliest thing. It's always about like a ring or that Rolex watch or a firearm. And it doesn't have to be that way. Another one is trusting, the misplaced trust. So they think that someone that they can trust is going to be trustworthy, and then they end up not. Another one, and I think the biggest one, is actually transfer on death utilization. I think it's overutilized and overpushed. And I say that because while it's a great tool, if it's used incorrectly, you can have a lot of unintended consequences. And again, with the fighting, the vast majority of the time, it goes exactly as you say. But the problem is, if the person you put down as your transfer on death predeceases you, and you say, hey, I'm going to give it to my son and my daughter, and the daughter predeceases, leaves children behind, the son will inherit and your grandchildren will not. So you just accidentally disinherited them. And there's also tax implications. If you have all of your assets in transfer on death, then there's no way to pay your final expenses, actually. There's no way to reimburse the person who paid for them. So hopefully it's one of those people who are a transfer on death beneficiary. The creditors are left in the lurch, but I guess we don't care about them. Other ones. I think another one to watch out for is the blended family. When there's two sides to that. There's if you leave it all to your new wife and she passes without having a good plan, your children can get disinherited. And then also from the children's perspective, sometimes they get upset about being what they feel is cut out. But if you look at it from the perspective of the parent who remarried, they've had a 30-year loving relationship. Doesn't it make sense that the new spouse should be taken care of with maybe at least the bulk of the estate? And I think that's an unfortunate family dynamic, and we can certainly make it a little bit better with trust, but I don't think we can solve every problem.
Absolutely. But they're definitely great questions to ask the family, as hopefully as people are in sound mind and can make decisions and discern how those decisions affect more than just themselves, right? Again, as you stated, this is about legacy and peace of mind, also, as you've brought up as well. I know with your answer, a little bit early in your answer, you kind of shared, with some of the situations with, the Rolex watches and the like, of course, keeping in mind that, patient, client, confidentiality. Are there any stories of it going wrong that you can go ahead and share with us?
Well, the most common one, and this happens frequently, is where one person, and it's not even necessarily a child, it could be a neighbor, it could be a roommate, but they just go through the house and they just clear it out, and that's very common in my line of work. And by common, I mean it happens with enough regularity, and it's shocking enough that we remember it. So that's one.
Wow.
But another one would be, and it's sad, and there's no great way to solve this one, but sometimes they fight over the remains, and there's that one's always tough.
Yeah.
That one I just feel like, okay, I'm trying to split a baby here, but there's no good way to do it. It's like divorce again.
Yeah. That's tough.
Yeah.
What about on a lighter note? Any stories you can share of it, of estate and tax planning going right with us today?
Absolutely. Just with any couple, we can make a bypass trust and save 40% off of that estate tax. And then we can reclaim some DSUE, the deceased spouse unused exemption, and just lots of taxes to be saved.
Yes, absolutely. Absolutely. Great point. What would you say there, Leighton, at this period in your practice, would you say is one of your bigger challenges?
Trying to balance everything. I'm finding that my days are getting more crowded, and trying to get everything I want to do done in the week is challenging. So that's probably my issue.
Oh, I hear you. That is not falling on deaf ears, my friend. Not at all. And is there anything else, last question, anything else that you would like our audience to go ahead and know before we close?
No, I think you've covered most of it. Any last questions for me?
Not that I can think of. Again, this is, I love when we find succinct podcasts that are just so chock full of just great golden nuggets. So I know that for our audience, this is going to be one of those that they're going to go ahead and watch repeatedly many times, because, in the short amount of time that you and I were able to speak, you just gave just a wealth of great information, So thank you again for spending time with us today there, Leighton. So again, yes, everyone, this is Eddie James here with our Legacy Stories podcast. I'm here with Leighton Tyau with Copper State Estate Planning. Leighton, again, we have just been so honored by your presence today, everything that you shared with us. People, don't hesitate to go ahead and reach out to him. Again, that website, can you give us that website again there, Leighton?
copperstateplanning.com.
Excellent. Yes, at www.copperstateplanning.com. Well, until we see you all again here at Legacy Stories, everyone have a great rest of your day. Bye-bye.
Thanks for listening to the Your Life, Your Legacy podcast with Stan Miller and Katie Beth Hand. If you enjoyed the show, please rate, review, and subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts. To find out more about Stan and Katie Beth, go to pinnaclelegacylaw.com. You can also find links in the show notes.